Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Riiv to receive the top 10 stocks to buy right now. If you are investing in renewable energy stocks, there is one thing you need to understand more than anything else, and that is that interest rates impacts this industry more than almost any industry out there. Whether you're building a solar farm, a wind power plant, or even just putting solar panels on your roof, when interest rates go down, it makes that energy cheaper. And when rates go up, it makes that energy more expensive. So I want to get to why that dynamic happens and how we should be thinking about investments in this space as a result. My name is Travis Hoium. Thank you for watching Riiv Investing here on YouTube. Please subscribe to this channel to get all of my content and turn on notifications as well. One of the interesting secrets about the renewable energy industry over the last decade is that this has been an industry that has been helped dramatically by low interest rates. Companies actually had rates falling because they were seen as less risky investments over time. You may remember going back to 2008, 2009, 2010, it was seen as a very risky investment to buy a solar farm or a wind farm. That obviously has changed. So that dynamic just within the industry meant that interest rates have come down. And then overall interest rates have come down as well. Obviously that has reversed in the last 12 months, but that has been a tailwind across the industry over the last decade. So why is that? Well, if you think about a solar installation, we'll use that as an example. A vast majority of the cost is borne up front. So if you're building $1 million solar farm, it's not going to cost you $1 million to run it next year. It's going to cost you maybe $10,000, a fraction of what it's going to cost to actually build the solar plant up front. But the payments that you get, the revenue that you get is going to be coming in over time, over the course of 20, 30, or 40 years. And based on the time value of money, when interest rates are very low, $1 in 20 or 30 years is still fairly valuable if you're discounting at an interest rate of, let's say, 1% or 2%. But now if rates go to 5%, 6%, 7%, suddenly that dollar 20 years from now is not nearly as valuable as it was when rates were much lower. This has become a challenge for the renewable energy industry because fundamental costs to build power plants are actually starting to rise. Commodity costs are going up. Solar panel prices are not dropping in the way that they were over most of the last decade. They're actually starting to go up a little bit as we have market share consolidating to a few bigger players. And they're having cost pressures as well. There's a couple of big headwinds behind renewable energy. The good thing, if you're an investor, is that other commodity costs are going up as well. The cost for natural gas is slowly increasing over time. It's becoming more expensive to run legacy power plants. Coal plants are getting more expensive. So when utilities or regulators are starting to make decisions about what sort of power plant are we going to build, renewable power plants still win. But the energy coming out of them may be more expensive today because of interest rates rising than they were a few years ago. A couple of ways that you can actually make money off of this dynamic is buying asset owners who have low cost of capital and have bought power plants in the past and are now paying a dividend on those assets. Brookfield Renewable Partners, which trades under the ticker BEP or BEPC, has a dividend yield of about 4.5%. NextEra Energy Partners has a dividend yield of about 5%. These are two of the industry leaders in owning renewable energy assets and then paying out the cash flow that they're generating over time to shareholders. They keep a little bit so they can keep growing the business, but they have contracts that extend sometimes more than 2 decades into the future. So we know a lot about what their cash flows are going to look like, and they've locked in a lot of debt at very low interest rates. So should have some tailwinds behind us, and we get some really nice dividend yields here as well. One thing I'm going to caution investors from is some of the equipment suppliers. I recently sold some shares of First Solar because I'm worried that demand for solar panels is not going to be increasing in quite the way that investors expect because of these rising interest rates. Plus, the stock had risen sharply over the last few months. So I think it might be time to take some profits on companies like that, which are going to see headwinds from higher interest rates rather than tailwinds like we've seen over the last decade. But the big takeaway here is that if you're interested in renewable energy stocks, you need to understand how interest rates work and how they impact the investment decisions that developers, utilities, and even homeowners are going to make when they're making their energy decisions. Higher interest rates is just simply not good for the industry. Doesn't mean Solar or wind or any of the other alternative renewable assets are going to die as a result, but they're not going to have the same tailwinds that they've had over the last decade. So what renewable energy stocks are you bullish on? I'd love to hear your comments in the comments section below. Remember to subscribe to Riiv Investing. Give this video a like. Thank you for watching, and I'll see you here next time.